Hi traders, welcome back. Today we're going to visit the chart of Cameco Corporation and the chart of uranium and use that as the guidepost, so to say. Cameco is the world's largest publicly traded uranium company. So the educational nugget today will be how to use correlated charts to get early signals and confirmations for your trading decisions. We will also get a grip on where we are in regards to price and time, as usual. And I will share with you my stance. And as always, these are educational-oriented recommendations. I'm not your financial advisor, so don't take my advice on any of these recommendations without doing your own research. For the short-term oriented traders, yes, I'm going to dive into intraday charts, so stay tuned until the end. So let's go ahead. Here we have the monthly chart of Cameco. The 2020 bottom we saw in most indices marked the turn in the downtrend in the stock price of Cameco, as you can appreciate here on the monthly log chart. This low enabled us to get a dynamic support line extending back to the 2000 lows at $1.75. It also enabled us to structure the chart in such a way that we get ascending and descending channels where the price could trade along the coming years. So we're using just along this chart, we could infer here several developments in future price action. Either the price could continue trade down this bigger channel like this, or we could coil here using these converging lines into the future. It will look like this, or yet the price could overcome this resistance and continue trading on the upper part of this ascending channel. Okay, we could also have another scenario of a bigger volatility where the price could eventually continue higher using the entire scope here of this bigger ascending structure, right? But and while there is a potential 300% gain here or more 500, there's still here a 60-70% loss from where we are trading now until the bottom of the channel. So we need to limit the price to smaller areas to make it more actionable, so that you can start formulating trade ideas with better risk to reward ratios. And for this, we go a little bit deeper here into the weekly chart. From here, we can already start seeing a different set of trend lines, dynamic trend lines using parallel only. The blue lines appear here on the weekly, and these already structures the chart in smaller areas. We can see where we are here trapped within this smaller congestion here at close to this recent tops, and already here from these intersections with the common horizontal support and resistance lines, we already get some key dates here, some intersections that we can use for the future. And also here we could do the same exercise and infer here where we could continue trading. Here we see that a smaller channel starts developing here to the downside. We also could see the price continue trading within this ascending structure here. Okay, so these are all scenarios that as we go down into smaller time frames, that we can infer here and start formulating our ideas. From the 4-hour, we can see this breakout currently happening here. And already we have here a first area of scope. So here we could start drawing a potential path for the price. So we could either directly target this upper line here, this descending blue line. We got it from a higher time frames, and in this case, a long trade based on current level would see the entry placed here at the breakout level or at some pullback later on. But let's use the current price action here, the current trading price, and we have the stop loss here below this ascending line, so we could trail the stop along with these lines. So in a long position, always use a placement where you have a meaningful ascending line so that you can shorten your stop on the long trade as time moves forward. And in this case, we'll have a first area here of target, or let's use this recent high coincident here with descending line here later in the last days of August here at 20 for a risk reward more or less 1-to-1. But you could also target this upper blue line to get a better risk to reward ratio, 2.5-to-1, and think about the fact that once the trade is open and as time passes, you would shrink here the stop towards the break even following this ascending line here. So a positive risk to reward ratio on from that angle here. And now we want to switch to the chart of uranium here, just to see if we get a confirmation to what is happening, what we see in the chart of Cameco. And here we have this the similar price action, but here we don't have a breakout just yet, and this is based on this descending line here. In order to see if that descending line appears on more occasions, we go into deeper time frames, and here we see how in the past this angle somehow made sense. We look for placements where we can anchor the lines in significant swing highs and swing lows, but we also try to anchor the lines at places where we see meaningful breakouts, where we see meaningful gaps, or where we see this kind of situations where we have a brief pause in the price action, a continuation move, and then we have a flip of polarity where we have on a first instance, the line works as a support like here, and then it flips into resistance later on. So you have this line validated from both sides. And the interesting thing is that you can go back, like for instance, this line that I will bold now here. This line goes back here to this was August 21. We see a very strong breakout here. We see the line being attacked here after the swing lows a few days before, and then a brief pause here after the breakout, and then a very strong acceleration. So this point is worth marking on your chart and use that to establish further lines in the future. So we could easily also go here and use any other lines and anchor them on that point here, so that you could use as a reference in the future, right? So here we have this this line. You can see that we get intersections of lines. The more intersections we get of this between these dynamic lines together with the horizontal lines, the bigger the significance of that price level in terms of price, but also in terms of time. And this makes for another potential point to anchor future lines or to let lines go through these points. So here, based on the uranium ETF, global X uranium ETF chart, we see that we have a first target here at 25.22. We are now trading at 20.70. In a potential long trade here, similar to the one we saw in Cameco. In this case, if we place the target here for a gain of the 21%, our stop would go here below this upward sloping yellow line, and similar to the other chart, we would slide or trail the stop along here to reduce the risk on this trade as well. So to summarize, Cameco is experiencing a bullish intraday breakout as a reaction to the positive results announced for the second quarter. 29 is the first target the bulls will aim for. So longs can have their stop trailed below this ascending support below $22. We can see this on the intraday, and this offers an initial 1.5 to 1 risk to reward. Long-term holders may also look for a continuation towards the $44.50 by October this year, an 80% gain, so a 6 to 1 RR here in this trade. A loss of the 22 level could change the outlook to a midterm correction that could extend eventually down to the $14 handle, or even $10 later on here, 1 year from now in June 23. So the market could, if we lose that level here, the $22, if this results in a false breakout and the market enters here, this area, we could aim for lower prices and even look to establish here shop here at just above the $10 mark. On the other side, uranium sees a similar play, trading at 20.50 as we speak, as 20.75, 76. Longs here could target the 25.15 area in August, or the market could meander higher with lower momentum and target 25.15 area in August, and or this 23.30 later in November. Any breaks of the 70 level would invalidate this view, and even a break below these $80 mark would serve as a first warning that this ascending support here could be invalidated in the near future, and the market would look then to conquer the $70, and then we could slide even further below entering these areas here. So that's all I got for you today. In future videos, we'll cover more mining stocks in ETFs, so subscribe to the channel if you don't want to miss future episodes. Until the next time, be safe.